Zacks Screen of the Week, an overview of a timely stock screening strategy aimed at helping you produce more profitable investing results. This week's screen has to do with price to cash flow. Let's find out more about it now with Kevin Matris, our top stock screener here at Zacks, and the person who heads up the Research Wizard division, and the person who puts all these screens together, I might add. This kind of sounds like a valuation metric, right? Just like PE ratio?
Yeah, absolutely. Lately, I have been running screens to try and assess a company's real value. The price to earnings ratio, or PE ratio, is probably the most common valuation metric out there that people use to determine whether or not a company is undervalued or overvalued. But I think another really good metric is the price to cash flow, and I think you can do that very same thing with this one.
And cash is kind of important to a company, especially now, but all the time.
Yeah, I mean, it's always important, but I think right now it is absolutely vital, especially nowadays, to be able to finance operations, invest in the business, and this kind of thing. The thing that's good for the investor when it comes to the price to cash flow is that the income can't really be manipulated, or I should say, the cash can't really be manipulated on an income statement the way earnings can. So if you were to look at the income that goes into the cash flow portion of the price to cash flow, that rightly adds back in depreciation and amortization because those are not really cash expenditures. But if you were to look at the income that goes into the earnings portion of the PE ratio, that does not add that back in, and that artificially lowers the income, thus skewing the PE ratio. And I think this is one of the reasons why so many analysts prefer to use the price to cash flow in an effort to really judge the true valuation of a company.
So the price to cash flow, is that calculated the same way, price divided by cash?
Yeah, it's the same thing. The PE ratio is calculated when you look at price divided by the earnings per share. The price to cash flow is calculated as price divided by the cash flow per share. And very similar to the PE ratio, the lower the number, the better.
Is there a particular number to use for this?
You know, if you were to look at the average price to cash flow for the stocks in the S&P, they are coming in right now a little bit over 8.2. If you were to look at the average PE ratio, that's coming in a little bit over 15.6. But again, just like the PE ratio, in general, looking at a PE below 20 is generally considered good. But the one thing I would say is when you are using the PE and the price to cash flow, I think it's a good idea to compare that value to its industry because you're going to find different industries use different numbers that are considered normal.
Okay, parameters for the screen.
Yeah, the parameters for the screen, it first starts off by looking at companies that have a Zacks rank of a 1. So only the strong buys are going to get through.
Number 1.
Then I want to see the projected growth rate to be greater than or equal to the average projected growth rate for the S&P 500. So again, I want to look at above market growth rates. Then, getting to the cash flow portion of this stuff, I want the current cash flow to be greater than or equals to the 5-year average cash flow. So again, I want to see the company's cash position improving. And then lastly, I want to see the price to cash flow to be less than or equals to the median for its respective industry. So again, I want to see the valuations lower than the other companies within its respective group.
And you have, how many? 5 that came through that you're going to share with us?
Yeah, there were 34 companies that came through this week's screen.
Wow.
We got 5 of them here. You've got AES Corp, BJ Wholesale Club, CGI Group, Mediacom Communications, and Rao Corp Holdings. Very, very different stocks, very, very different industries, but all of these companies look good, the valuations are very attractive, and I think these are definitely companies you would want to add to your watch list.
Do you own any?
Not at the moment.
Alrighty. If you want to check out the text version and check out those other stocks out of that 34 that came through the screen this week, go over to Zacks.com, scroll down the homepage till you get to Kevin's picture. The headline right next to it pertains to this particular topic. Click on it. It'll take you right to all of that information. With Kevin Matris and the Screen of the Week, I'm Terry Ruffalo.